So this stock is clearly priced for some sort of major downturn, a major catastrophe. As I said, I saw that 2010 peak. I don't think we're going to get back there again, but this is calculating off 2012 numbers. So we're not even taking into account this 2010 record high over here. At 104 million in free cash flow, we're ridiculously undervalued. Either that or this is one of the biggest value traps out there, especially given the market and what it's done over the last year and a half or so, and even since 2008, I guess it's been skyrocketing. This has gone in the exact opposite direction. So one of these three factors, either the growth rate or discount rate or our starting free cash flow point, are way out of whack. So which one of these is out of whack, or are all three out of whack? So first off, let's start with the free cash flow number, $104 million. Now this takes into account all of the programs they do and all the courses they do. So for this starting point to be valid, we're going to have to say that every program that they do today is going to continue and should receive all this benefit, or all the future free cash flow growth. I'm not so certain of that. When I look at their website, I see School of Information, this School of Business here. I completely want to take this out of the equation. I don't see value in going to ITT Tech for a business degree. There are many other programs out there that are much more prestigious and offer just as much, if not more, value to somebody who's trying to get into the business world with a degree. When somebody goes out and is hiring for an accountant or somebody in finance or business administration, the school really does matter, and it does play a psychological role in the hiring manager's decision. They do look at that, whether consciously or subconsciously. Like, you're competing against the Harvard MBAs in this world, the Penns, the School of Chicago University, any of the other major universities. There's thousands of them out there. Pick a school with a football team, they've got a business program. And I think all of those names are more valuable. So the only thing they can compete on in this area is price. And when you look at the 10K, and you go through it, I found in there that the average tuition is about $17,000 for the degree, which is in line with a lot of the other programs that are out there. So I don't see much benefit in their program based on price. So when we look at their value proposition here, I think I got to take the entire School of Business out of the equation. I don't think this is going to last. I think we can just treat this as kind of gravy if this goes along. However, the School of Information Technology, this stuff is valuable. The people that go through these programs are not really competing against people who go to the traditional four-year college, and the job market they're competing in is probably a lot different than the people that are in these four-year college programs. So I see value out there in getting these degrees. So I can keep this School of Information Technology out there because the job market that these people are going to go into, they're competing against people with similar education backgrounds, and the ITT Tech brand is okay in those areas, in my opinion. School of Electronics, I think they're a very strong brand out there. School of Drafting and Design. These are fields where you're not going to be competing as much against the big major universities and colleges, and even a lot of the local smaller school universities, nonprofit universities. So I see value in the brand in these types of fields. Same with the School of Criminal Justice and the nursing school. This has been a very popular degree to get into for nurses, having to get that extra credential out there. So I see value in a lot of these. So I want to take out the School of Business, and that's really it. I think the rest of them, their brand is okay, and we can say that yes, they will be a competitor in these areas. But the School of Business, I just can't get behind that at all. So I'm going to discount out the school of business. Now, I couldn't find the enrollment ratios out there for these schools, but given that there are 6 of those schools out there, so the school business would be 1/6 of it. Maybe I'll take 75% of this number. I'll say the school business is 25% of their core business out there, and I'll just make this 75 million. I think that's a conservative number, given that they're 1/6 of the courses. They're I think 75 million is a fair number to start with. It's 75% of this, or even a little bit less than that, but it's a nice round number, and I like nice round numbers. Okay, so let's start at 75 million. So we're already chopping out a big portion of their programs already, which have already been significantly slashed. What about this growth rate, 25%? Do I think their core course load, because again, we're taking out the school business altogether, we're just going to ignore it. Do I think they're going to grow 25%? Absolutely not. They are not going to be growing at that rate over the next 10 years. The benefit that they have is that there's massive inflation in the education arena. I don't see that going on much longer. I think that the tuition bubble is going to burst soon. Schools are not going to be achieving price increases that they were over the last 10-15 years. Given the student loan situation that's out there. So I don't see them getting a growth rate like that. But in the school, I still think there's a demand for these fields that they have out there. These IT fields are growth areas. There is massive demand out there for people that can handle data. As we saw with Oracle, big data is coming. So handling these network systems at companies, and software development is always big. Cybersecurity, obviously the #1 crime out there today is cyber theft, or identity theft, mainly through the web. So cybersecurity is huge. Data hacking is becoming more and more prevalent. So cybersecurity is going to become more important, having people that can do that. Electrical engineering is going to be a big one as well. These are fields that are going to have demand, but we're seeing a diminished interest in the education field, and I see that turning around as the job market tightens in those other areas. People are going to come to these areas because these are going to be very well paying jobs going forward, because there's going to be a lack of skilled workers in them. Drafting and design, always important to have people that can design and do graphic illustrations on computers. If you go to any of these websites out there, photoshopping is a big deal, and this is much more technical than that. Game design, so all type of design on computers is growing exponentially, especially with the rise of the internet as it continues to get better and media becomes better. Obviously, I could use somebody that could do some graphic design on these videos, because they're not exactly top notch in video quality. Criminal justice, there's always a demand out there for people who can do paralegal work. Obviously, the legal field's always growing because people are suing each other all the time, so paralegal work is going to be important. And then nursing is growing. As we have an aging population, more and more nurses are going to be needed out there. So I see growth in these fields that they're in and specializing in, and the competition for the jobs that the people going to these programs is not as great as a communication major or even a business degree out there. So I see that they'll have some growth in these arenas, but 25% I think is a little too high. I'm even going to go down to 10%. I'm going to say that they'll have 7% growth in enrollment, and I'll give them 3% in inflation. So I'll give them 10% growth. And then terminal value, I'll just say, let's call it flat line. They're going to go with inflation on this at 3%. What about their discount rate? 9%. As we saw, if you look here at their stock chart, they've gone up into almost 140 and come all the way down to us. So there's a lot of volatility out there in the stock, and I don't want to be a technical trader here, but I just want to say there's a lot of volatility, a lot of risk here. And even if you look at their cash flows, they are pretty volatile. They go up to 552 and all the way back down to 104. So there's a lot of volatility in here. There's a lot of variance going on. They also have that very high debt ratio. We explained that's not that big of a concern, but it's still there, and it's something I want to take into account when I'm valuing it. So I think 9% is way too low for a company this volatile, and with the volatility in their financials. In addition to that, they're going through some major lawsuits right now where they are being sued by their shareholders on behalf of these law firms, stating that they did not disclose a lot of obligations they had on student loans, where they were guaranteeing the loans to these financial institutions. They were part of the guarantee of the loan, so they have this liability that wasn't disclosed in their financial statements. So there is a lot of risk involved there, because if they lose that lawsuit, obviously that's going to hurt the entity as a whole. So there's a lot of risk out there. There's a lot of risk of their schools being closed, if accreditations get lost. If you read through their 10K, it is like reading Revelations when you look at the risk factors. It's a very, very long section out there, and I scrolled past it earlier. If you look at risk factors here, there's a lot of risk factors out there. Monetary fines or penalties on their campuses, terminating their ability for grants, reducing accreditations, suspending financial aid. So they are heavily dependent on this student loan industry that's out there in getting financial aid. Obviously, they're in the business where somebody is trying to increase their upward mobility, so they probably don't have the financial means to pay for something today, so they're going to need financing. If ITT Tech cannot find them the financing, they are not going to get the business. So there's a major risk out there for Title IV and state financial aid programs to take away their eligibility. And given all the other issues they have out there, that puts that even more at risk. So I'm very fearful of that, and so I want to give them a 20% discount rate, because I am very, very afraid that they are going to may lose some of that. So I need a lot more safety out there in my investment. So even with all of those three factors, cutting their cash flow by 25% from where it is today, reducing their growth rate down to 10% just on the fields that I think will continue to grow, and giving them a significant discount rate, 20%, which is really high, and the highest one I've given, and a 3% terminal growth rate, I'm still getting a value of 33.20, which is a margin of safety of 61%. I think they're way, way, way undervalued. And in addition to that, and this is just looking at what their cash flow is, they do have a lot of assets out there backing up this price. This building of 155 million and 139 million, and all of these fixtures, machinery, furniture, and equipment, they've got $375 million in these assets out here. This building, because they've been around for so long, this number could be extremely low. They could be on the books for this much, but those buildings could be a lot more, because real estate has appreciated over the long term, not so much in the last couple years, but over the long term. So anything they have on the books from way back in the day, and again they've been around since 1941, could be worth significantly more than what is being shown here. Same with the land also. I mean, land doesn't depreciate, and this is on the books for the purchase price. So there is some backing, some book value backing on that. So I see that this company has its struggles, but I think the risk far outweighs the reward on this one. They could go under next year, but the risk involved here, I think, is minimal. I think the damage has been done. They've gone from $140 per share down to $12. I think that all the bad news has been incorporated into the price, and we are as far down as we're going to go. The risks are minimal at this point. Full disclosure, I am invested in this. I did purchase them, so I am a shareholder, so I have a reason to do this. But I was being very conservative when I did my valuation, even looking at the blood in the streets and doing a zombie apocalypse valuation. I'm still getting this as a buy. So that's my thoughts on this. This is a little bit different. I think this is a Ben Graham play and not a Warren Buffett play. So keep that in mind when you're doing it, and I hope to see you next time. Take care.